we're in a couple of situations in a few of the energy verticals like heating oil and gasoline, where funds are the least long futures that they've been historically. And there's a fairly sizable short position that's building in crude oil, looking for it to trade down into the low 60s, et cetera. Those positions, I think, are kind of offsides, given, how far commodities have fallen. They've shown really, really good resilience at the lows. Base metals have come alive. Precious metals just keep pounding new highs in gold. Silver is kind of along for the ride, in my opinion, but going to do just fine. So with that in mind, and with the idea that nobody's got these positions on right now on the long side, and that I really feel that these could be the place to be for the rest of the year, thinking that all of the economic weakness has been really priced in. We've got a couple of setups where they're vulnerable on the upside, and it's a trade that I'm going to try to stay with, because I think that if we see sustained investment in this commodity space as energy comes alive, this uranium trade very much just came alive this week, and that's exciting. And I feel like at the very least, I would rather say that the next $10 in oil is higher rather than lower from $70 last sale.
Do you have a price target?
I think that, in terms of the oil trade, I think it's fair to say that we can get back into the low 80s, and that's kind of just back into the, top end of the sort of middle top end of the range. I feel like we're way overdone down here in the downside, and it looks like the market might be able to sustain itself. We're not in a physical glut situation. What I'm looking at is a sort of cyclical slowdown in the economy, and not a dump into a recession that we're not going to get out of.